Welcome to AI Explains ICT. In this video, we are breaking down the core content from month 11, episode 2, and we're talking about mega trades in currencies. So for all you Forex traders out there, you're definitely going to want to grab a notebook and pay close attention. We're about to unpack the framework for spotting those massive, explosive moves in the market.
So, here's what we've got on tap. We'll kick things off by defining what a mega trade actually is and the key macro factors that set the stage. Then we'll dive into the core analytical tool, relative strength, and pull it all together into a clear, step-by-step process. To wrap it up, we'll walk through a great case study from ICT and give you a final summary of the key takeaways. All right, so first things first. What exactly are we hunting for when we use the term mega trade? Well, it's a very specific style of trading that occupies a pretty unique spot on the timeline.
So what ICT is talking about here isn't your typical day trade or even a short-term swing. Nope, it's bigger. It lives in that sweet spot right between a standard swing trade and a full-on long-term position trade. The entire goal here is to find and ride those really significant, explosive price moves that have the potential to run much, much further than you might think. Now this is the secret sauce for the timing. ICT calls this the quarterly shift, and the core concept is pretty simple. About every 3 months, the market has a tendency to carve out a major turning point. This recurring cycle is the very first signal we look for. It's what sets the entire stage for potential mega trade.
Okay, so once we've identified that potential quarterly shift, we can't just dive in headfirst. We need to apply a few layers of, let's call them contextual filters, to make sure the overall environment is actually right for a big move. You can think of these as the essential ingredients in our recipe.
And here are those key ingredients. To build a solid megatrade idea, ICT teaches that we need to look at 4 specific things: seasonal tendencies, the direction of the good old US dollar index, the price action of the major currency pairs, and the data coming from the futures market. Let's break down each one.
First up, seasonal tendencies. Now ICT is super clear on this one. Seasonals are like a historical roadmap. They give us a clue about how a currency might behave during a certain time of year based on past performance. But, and this is a big but, they are not a crystal ball. If the current price action and institutional order flow are telling you a different story, you've got to listen to the price. Ideally, you want the seasonals to align with your idea, because that just adds another layer of confidence.
Next up, the US dollar index. This one is completely non-negotiable. According to ICT, any valid mega trade setup must have the dollar's direction confirming it. So for instance, if you're bullish on the British pound, you absolutely need to see weakness in the dollar index. If they're out of sync, the setup is off the table. Simple as that. Now let's talk about the majors. It doesn't matter if you're planning to trade a major pair like the Euro USD or a cross pair like CAD/JPY. Your homework has to start right here with these 7 pairs. Why? Because this is where all the big money moves originate. All the underlying strength and weakness, all the clues, they're found by first understanding what's really going on with the majors.
All right, we've got our timing and our contextual filters. Now we need an analytical engine to really pinpoint the true leaders and the laggards in the market. And that's where relative strength analysis comes into play. It's the tool we use to objectively figure out which currencies are genuinely strong and which ones are genuinely weak. ICT gives us 2 main ways to do this. The first method is super straightforward. You just pull up the currency futures charts and compare them side by side. You're literally just looking to see which ones are making higher highs and higher lows. The second method involves using an overlay tool to stack multiple pairs onto one chart. This lets you visually spot SMT divergence, where one pair fails to confirm another's high or low, to see which currencies are falling behind.
And this slide illustrates those 2 approaches perfectly. On the left, you've got that clean, direct comparison of the futures contracts. It's really easy to see what's going on. Then on the right, you've got the MT4 overlay. And yeah, I know, it looks like a plate of spaghetti at first glance, but as ICT explains, if you know what you're looking for, that one messy chart can give you a mountain of information about market relationships. Both methods will get you to the same answer.
Okay, so we've covered the timing, the key ingredients, and the analytical engine. Now let's put it all together into a simple step-by-step process that you can actually follow to filter the entire market down to a single high-probability trade idea.
So here it is, the 4-step filtering process. First, you analyze the currency futures to get a feel for institutional order flow, a general sense of what's strong and what's weak. Second, you confirm your directional bias with the US dollar index. Third, you use that relative strength analysis to isolate the single strongest currency and the single weakest one. And finally, you pair those two leaders together. That's how you find your high-probability mega trade.
You know, theory is great and all, but let's see how this actually works in the real world. We're going to walk through a fantastic example from ICT, all the way back from June 2017, to see how this entire framework can uncover a massive trading opportunity.
So after following the process, the analysis in June of 2017 pointed to two clear frontrunners to the upside, the Canadian dollar and the Australian dollar. These currencies were showing major signs of institutional buying, and on the flip side, the analysis found one particularly weak currency, the Japanese yen.
And you can see that divergence plain as day on this slide. Look at the left. The Canadian dollar futures are in a powerful uptrend, just consistently making higher highs and higher lows. Now look at the right. The Japanese yen futures are doing the exact opposite, just breaking down and making lower lows. This right here is that classic signature of strength versus weakness that we're looking for.
So, what happens when you pair that kind of unmistakable strength with that kind of undeniable weakness? Well, in this case, pitting the strong Canadian dollar against the weak Japanese yen pointed to a potential monster move of 845 pips.
And boom, here's the result on the CAD/JPY chart. Just like the analysis suggested, pairing that strong CAD with the weak JPY led to an absolutely explosive rally. The market just took off in the second week of June and basically never looked back. This is the incredible power of the megatrade framework.
But hold on, that wasn't the only opportunity brewing. Remember, the Australian dollar was also identified as a strong currency. So pairing that strong Aussie against the same weak Japanese yen pointed to another massive potential move, this time for 630 pips. And sure enough, the AUD/JPY pair delivered the goods. This chart shows a powerful 630 pip rally, and look, it started at the exact same time as the CAD/JPY move. This isn't a coincidence, folks. It's the result of a systematic process of finding strength and weakness and then simply pitting them against each other.
All right, so let's wrap this all up. We've just walked through the entire top-down process that, according to ICT, can help you identify where the large institutions are positioning themselves for those huge, explosive moves in the currency markets.
Here it is, your final checklist. This is the recipe, the whole shebang. You start by patiently waiting for a quarterly shift. Then you check for seasonal alignment. You must confirm your bias with the dollar index. After that, you perform your relative strength analysis on the futures to find the #1 strongest and the #1 weakest currency. And finally, you find the crosspair that pits them against each other, and that's when you can start your lower timeframe analysis for an entry.
So there you have it, a powerful, top-down framework for finding some of the biggest moves in the Forex market. The real question is, what are you going to be looking for as the next quarter unfolds? If you found this breakdown helpful, do me a favor and hit that like button and subscribe to the channel. If you have any questions at all, drop them in the comments below, and a real human will get back to you. Until next time, safe trading.